Welcome to the Deep Dive. We take your sources, articles, notes, whatever you send, and pull out the key insights.
That's right. And today, our mission is really to unpack this fascinating trend. Billionaires getting into Bitcoin.
Yeah, what does that signal for Wall Street? And also, what about the early folks? Are some feeling maybe a bit of hindsight regret?
We got some great material for this deep dive, drawing quite a bit from figures like Gary Cardone. He offers a really unique view into crypto right now.
Gives us a real pulse, doesn't it? So we're aiming to uncover some surprising facts, some essential stuff about Bitcoin's journey, from niche curiosity to major financial player.
And we'll try to keep the jargon low. Just the core ideas.
Exactly. Ready to jump in.
Let's do it.
Okay, so let's kick things off with something that honestly might make you do a double take. Wall Street, they're getting seriously involved with Bitcoin now.
It wasn't that long ago they seemed, pretty hostile, right?
Totally. And Gary Cardone shared this great little story. He told his brother he'd bought 1,000 Bitcoin. And his brother's immediate reaction, like almost gut level, was, well, I need 3,000 then.
Wow. It's pure FOMO right there, isn't it? The fear of missing out. Textbook FOMO. But, beyond just that knee-jerk thing, what does that really tell us about how these high net worth people, how institutions are thinking differently now?
That's a really good question. It's not just impulse. A key thing here is how Bitcoin went from being, this sort of rogue speculative thing.
Right, the Wild West.
Exactly. To something Wall Street is actually embracing. And the ETFs, the exchange-traded funds, they were like Bitcoin's adult swim pass.
Yeah, good analogy.
It gave them a regulated, familiar way in. Suddenly, it fits into their sophisticated financial world.
And there's the whole 24/7 trading aspect too, right? That was dependent.
Oh, massively. Think about it compared to traditional bankers' hours. Bitcoin trades all day, every day. That's constant opportunity. Wall Street loves that.
So they're not just latecomers. Their view has totally shifted. They went from being maybe adversaries to, influential players, even if they were a bit tardy. Precisely. And this institutional buy-in, it does more than just validate Bitcoin. It fundamentally changes how the wider financial world sees its risk.
Which could unlock, potentially trillions in new money?
Potentially. And it cements Bitcoin as a real macro asset, something that could actually impact, your own long-term investment plans.
Okay, so that's the big money moving in, but what about the pioneers? The people who were there really early on.
The OGs.
Yeah, you'd think they'd be sitting pretty, no regrets. But apparently, that's not always the full picture. Let's dig into that should've, could've feeling some might have.
It's quite poignant, actually.
Yeah.
And it speaks volumes about having a long-term vision, or maybe sometimes lacking it. Our sources suggest 3 common pitfalls.
Okay, like what?
First one, stopping stacking.
Yeah.
Getting to maybe one Bitcoin and thinking, okay, that's enough.
Right, and then missing out on more gains as it grew.
Exactly. Second pitfall, getting distracted by altcoins.
The shiny new things.
Yeah. Pouring focus and money into other cryptocurrencies, while the big institutions were laser-focused primarily on Bitcoin.
That's a crucial distinction, the institutional focus.
It really is. And the third one, kind of underestimating the end game. Not quite grasping Bitcoin's long-term potential, its trajectory.
Gary Cardone had a good line for that, didn't he?
He did. He compared it to leaving a concert before the encore, missing the biggest part of the show.
Ouch. That paints a picture. But playing devil's advocate for a second. Back then, Bitcoin was incredibly volatile, brand new. Wasn't it kind of rational to take some profits? Or to explore other projects that maybe promised even faster returns?
That's completely fair. Hindsight is 20/20, right? The lesson isn't maybe that exploring was wrong, per se.
Mm-hmm.
It's more that the institutional attention stayed so fixed on Bitcoin. So those early diversified bets might have ended up being, a distraction from the main event, as it turned out.
Cardone's quote about watching the early crowd miss the biggest wins. That's pretty stark.
It is. It's going to be tough, he said. But for you, the listener, there are valuable lessons here, right? The power of a long-term view, maybe avoiding too many distractions in any investment.
Yeah, definitely food for thought. Now, let's connect this to the bigger picture, the traditional financial system. It's fair to say it's facing some turbulence right now.
That's putting it mildly. We've seen serious inflation, haven't we? Driven by, massive money creation by central banks.
The whole money printer go brr meme wasn't entirely wrong.
Not entirely. Yeah. And that devalues regular currencies. Then you've got the risk, however small people think it is, of banks may be freezing funds,
Yeah, that's a background worry for some.
and just the general volatility of national currencies. Lots of uncertainty.
So how does Bitcoin fit in as a counterpoint to all that?
Well, this is where it gets interesting. Bitcoin presents itself as maybe a more stable alternative in some ways. It has some specific benefits against those traditional finance issues.
Such as?
Okay, first, no surprise inflation. Why? Because its supply is pre-programmed. It's fixed.
Right, the hard cap.
Exactly. Second, it allows for global money transfer, often much faster than old-school banking.
Okay.
And maybe most importantly, its decentralized nature means it isn't really tied to the struggles of traditional finance. It can actually, arguably, get stronger when traditional systems wobble.
That raises a big question about control, doesn't it? How much control do you actually have over your money in the old system versus this new one?
That's a core part of the argument. And the absolute crucial fact underpinning all this is Bitcoin's fixed supply. Only 21 million coins. Ever.
Compare that to fiat currencies,
Where governments can and do print more whenever they feel like it. It's a completely different philosophy of money.
that fixed supply really does feel like a potential game changer. So looking at it that way, Bitcoin could be seen as a sort of hedge, a way to gain some stability or control back in these uncertain financial times.
That's certainly how many people are starting to view it, as providing a potential anchor, a sense of stability that might be missing elsewhere.
All right, so given everything we've discussed, Wall Street piling in, the lessons from early adopters, the contrast with traditional finance, what are some smart ways for people listening to navigate this? How can you get involved or stay involved without just reacting emotionally, especially with all the hype?
Yeah, avoiding that FOMO trap is key. Gary Cardone actually lays out 3 pretty practical rules that seem quite helpful.
Okay, let's hear them.
Rule 1, buying the dips. His motto is catchy. 20% drop, time to shop.
Huh, I like that. So basically, don't panic sell, see drops as opportunities.
Exactly. It encourages discipline, buying when others might be fearful. Rule 2, thinking in Satoshis.
Satoshis, the smaller units of Bitcoin, right? Like
Yeah.
cents to $1.
Precisely. The idea here is recognizing that owning a whole Bitcoin is becoming, well, pretty exclusive, very expensive.
Yeah.
So focus on accumulating smaller amounts, the Satoshis. It makes it accessible.
Good point. It keeps it from feeling like you've missed the boat entirely if you can't afford a whole coin. And the third rule.
Leveraging Wall Street's involvement. Basically, understand that their huge investments, potentially trillions, can actually lift the boat for everyone holding Bitcoin.
So the strategy isn't to fight them anymore.
The strategy, in Cardone's view, is simple. Just hold on. Let their massive capital inflows potentially work for you.
That 20% drop. Time to shop. Line. It sounds simple, but doing it, when the market looks like a bloodbath, that takes real guts.
It absolutely does. It requires conviction. And this leads to a really interesting shift in perspective Cardone highlights.
Which is?
Bitcoin's role. It's evolved. It started maybe with this rebellious vibe, got to dethrone the financial elite.
Right, stick it to the banks.
But now, he frames it as the ultimate upgrade. It's not about rebellion anymore. It's about joining them, in a sense, on this new financial platform.
He had another quote on that, didn't he?
Yeah. This isn't rebellion anymore. It's the ultimate upgrade. And your invite's here.
That's a powerful reframe. So these strategies, buying dips, thinking in sats, holding on, they're not just theories. They're meant as practical ways for you, the listener, to actually participate in this shift.
Exactly. Actionable ideas.
Okay, so as we wrap up this deep dive, here's something to maybe chew on. Bitcoin was originally designed, conceptually at least, to be outside the traditional system.
Decentralized, peer-to-peer.
But now we see Wall Street, we see billionaires fully embracing it. What does that really tell us about where money and power might be heading?
It's a huge question.
And importantly, what new roles could you, the individual, play in this landscape as it keeps evolving?
It really is a financial transformation happening right now in real time. Hopefully this deep dive has given you a clearer glimpse into some of those shifts.
Yeah, and maybe spark some thoughts about the broader implications for your own financial world, too.
Definitely lots to think about.